Yes, dear students, today we are going to see capital expenditure and revenue expenditure, capital income and revenue income. This topic is very important for students of grade 10 and grade 11. So you have to listen carefully in order to understand what we mean when we say capital expenditure and revenue expenditure. Capital expenditure are those expenditure which do not form part in the normal trading activities of the business. That is, these expenditure do not take place on a daily basis in a business. For example, a business will purchase building, equipment, motor van, and other non-current assets. These non-current assets will not be bought on a daily basis. That's why we say capital expenditure items do not form part in the normal trading activities of the business. Capital expenditure items are recorded in the statement of financial position. For example, motor van, building, equipment, these are capital expenditure items. And items which add value to non-current assets are also known as capital expenditure. For example, installation of air conditioning system in a house, it will add value to the house, therefore it is known as capital expenditure. Any item which add value to non-current assets also known as capital expenditure. Extension to premises, this is also capital expenditure. Capital expenditure are expensive in nature, that is, they involve huge amount of money. And we have seen that capital expenditure items do not form part in the normal trading activities of the business. They are chargeable to the non-current assets in the statement of financial position. Items which add value to non-current assets are also known as capital expenditure. Capital expenditure are expensive in nature. That is, they involve huge amount of investment. So, example of capital expenditure are purchase of equipment, purchase of building, purchase of motor van, installation of air conditioning system, extension to premises. These are capital expenditure items. Now let us see what we mean when we say revenue expenditure. Revenue expenditure are those expenditure which form part in the normal trading activities of the business. That is, these expenses are incurred on a daily basis in a business. For example, paying rent of building, purchase of goods, payment of wages to employees. All revenue expenditure items are recorded on the debit side of the income expenditure of the income statement. They are not expensive in nature, that is, they do not involve huge amount of investment. So these are revenue expenditure. All expenses incurred in a business are known as revenue expenditure. Now let us see what we mean when we say capital income. Capital expenditure is expenditure incurred in the normal trading, not in the normal trading activities of the business. For example, purchase of motor van. We do not purchase motor van on a daily basis. Similarly, a business can sell motor van at the end of the year or at the end of an accounting period. The sale of the motor van will result to inflow of cash. This amount of money obtained from the sale of non-current assets is known as capital income. Capital income do not form part in the normal trading activities of the business because we do not sell non-current assets on a daily basis. Example of capital income are sale of motor van, sale of building, and so on. Now, revenue income, or what we call revenue receipts. Items which are recorded on the debit side of the income statement are known as revenue expenditure, and items which are recorded on the credit side of the income statement are known as revenue income. For example, purchase of goods is revenue expenditure. Amount of money obtained from the sale of goods is revenue income, or what we call revenue receipts. So here we are concerning types of expenditure and income. So we are going to make a recapitulation of what we studied so far concerning capital expenditure. Capital expenditure are those expenditure which are not incurred on a daily basis. That is, they do not form part in the normal trading activities of the business. Example of capital expenditure are purchase of motor van, purchase of building, and so on. Items which add value to non-current assets are also known as capital expenditure. Capital expenditure items are recorded in the statement of financial position. Capital expenditure involve huge amount of investment. And revenue expenditure are those expenditure which are incurred on a daily basis. That is, they form part in the normal trading activities of the business. Example of revenue expenditure are purchase of goods, payment of wages to employees, payment of rent of building, payment for sundry expenses, and so on. Capital income. Capital income is a receipt obtained from the sale of non-current assets. For example, sale of building. Revenue income. All items which are recorded on the credit side of the income statement are known as revenue income. For example, rent received, commission received, sales of goods, interest received, and so on. These are revenue income. So here we are concerning revenue expenditure, capital expenditure, and capital income. I know that this topic will be very important for you for revision purposes for grade 10 and grade 11. Thank you very much. Good luck for your examination.